What's going on, traders? Today I want to talk about a very powerful swing trading strategy that can be used on multiple time frames. So this strategy is the 10-day and the 50-day EMA crossover strategy. So I'm going to show you how this strategy can be employed on different time frames, starting with the daily chart and working our way down to the 4-hour, 2-hour, 1-hour, and so on and so forth, right? So let's start here by taking a look at the daily chart. This is 1 year, 1 day. So the 10-day EMA is the yellow line and the 50-day EMA is the blue line. Going back 1 year, we could see during times of corrections and pullbacks, the 50 EMA acts as a support, except for times when it doesn't. Now, if I were to use a higher EMA, such as 100-day, 150, price would catch here, but we're going to talk about that a little bit later. But just for the purpose of what we're talking about now, with the crossover strategy, we could see where these arrows are. Every time the yellow 10-day EMA crosses below the 50 EMA, which is the blue, price tends to go off course temporarily. And then once we go back up, we may not know if the uptrend is going to continue, but what signals that right here is when the 10 EMA crosses above the 50 EMA again. So if we don't get this signal of the 10 EMA crossing above the 50, then this could either be a fake breakout or this could just be price testing resistance as it did right here. See how it tested the resistance, failed to break above, tested it again, pulled back down. But then what initiated that uptrend signal again? Let me pull back out. Right here, when the EMA, the 10 EMA crossed above the 50 and we continued to rally, while the 10 EMA continued to hold as support until we broke down again. Now let's look at number 3 over here. When the 10 EMA crossed below the 50, boom. If you would have caught this move right here, could have entered in a short, stop loss above the 50 EMA, and you could have rode price all the way down while staying short below this EMA and just had a trailing stop. The second price broke above the 10 EMA, you could have cut your position and taken your profit. Now, number 4, the fourth crossover, 10 crossed back above the 50 and initiated this rally. And now currently, where we're currently at, this 10 EMA is currently starting to curl over, and if we do see this 10 cross below the 50, we could see potentially more downside. Now, do we know if this is going to happen for a fact? No, we do not. So I'm not going to make any premature predictions, but in the coming days, we will see what happens. Now, let's move down to the shorter term time frames. Let's jump over to the 4-hour chart because it's actually something important that I really want to point out. So looking at the 4-hour, I've noticed that there's a lot of false signals on the 4-hour, but it also there are times that it does give signals. Like here is one signal, here's one, right? There are a couple signals on here, but it's not as effective as other time frames. So me personally, I like to use the daily chart and I like to use the 2-hour chart for my swing trades when I use this strategy. Now, if I'm day trading or if I'm just catching maybe a 3 to 5 day swing, I'll use a 30-minute chart or an hourly chart, right? So with this strategy, I don't use the 4-hour chart and I don't really recommend it. If you do like to use it, then by all means go ahead. But I think personally it gives many false signals and it chops around a little bit. But if we take a look at, let's say, the 20-day 2-hour, it gives a much better signal. Notice how right here, boom, 10 crosses over the 50. What happens? Boom, we get this whole monthly rally. We could have entered here. Well, entered here on the confirmation on the candle. Boom, and the stop loss would have been here on a break below. Then we would have gotten out on a break below this 10 EMA right here. We could have re-entered back in on this candle, stop loss below, right? Until what happened? The 10 crossed below the 50 now. So now this is where we're currently at to date. Now, I wouldn't take long here unless this 10 crosses back above the 50. If that doesn't happen, I'm going to go short. I'm going to look to enter my short around here with a stop loss above here, right? So this is why I like the 2-hour because it gives a much more efficient signal than the 4-hour does. So now let me clear this. So now let's say if I was looking to maybe, trade on the intraday and maybe do like a 5-day, 30-minute. I personally believe, let me do a 10-day, 30-minute. 15 is fine. I would like this chart very much so because it gives phenomenal signals. We could see it acts as support perfectly for both the 50 and the 10 EMA. Price hugs it phenomenally. When it does break, comes around the 50, then goes right back above the 10, hugs it as support all the way up. We could see there's a very strong relation with price and EMA holding as support. But when we do get this crossover from the 10 downward to the 50, what happens? Boom. Again, our crossover worked. When price breaks back up, the 10 EMA breaks above the 50. What happens? We get a small little intraday rally, but the 10 crosses back below the 50, and we get that pull down once again. So we could see on the small term time frames, it does work more efficiently, right, than that 4-hour chart. So the 4-hour I really stay away from. Something else that I actually want to point out on the daily chart that I should have mentioned before is, along with this crossover strategy, I also use the RSI. For those of you that don't know what the RSI is, it's an oscillator that measures overbought and oversold signals. So now what does that mean? When the RSI reaches the 70 zone, that means that price is temporarily overbought, right? Meaning that it's so overextended right now that it needs to cool off eventually and come back down. When price is around the 30 zone on the RSI, that means that price is very oversold, and soon enough, price will eventually snap back up, right? So with that being said, we can see every time the RSI comes down around the 30 zone, 40 zone, it tends to hit a support, right? And it correlates with the RSI zone. Boom, 1, 2, 3, down here, 4, 5. It continues to correlate. And every time it's at a high, it also correlates with the RSI as well. Now, some may ask, why do I use the RSI for? And the reason being is that it gauges how much risk I put onto each of my trades. So if the RSI is below the 50 zone, I'm more likely to put on my regular size. If the RSI is above the 50 zone and I know it's kind of extended, like for instance, let's say somewhere around these levels over here. Notice how the RSI is around the 50, 60, even around 70 over here, but price continues to run up, even though we had a little boom, pullback, held support. At this level, I would put on regular size and add as I go up. Once we break above and I know that and I see that this RSI is at 60 to 70, I'm going to either start cutting profit or scaling out very slowly. And if I do add another position, I'm going to wind up putting on a small position, taking very little risk, because I know that the RSI is soon going to cool off and come back down, as it did a month later. Boom, came back down. This would have been another entry for me to put on additional heavy risk, right? So that's why I use the RSI in correlation with the moving averages, although it doesn't pair up with it exactly every single time. Like for instance, when it came back down here to the 30 zone, you could have bought here for a nice rally up, a couple hundred point move up, or about 150 point move up, but there was no crossover to enter this. So you can't rely on the crossover strategy each and every single time, because you will miss out an opportunity, but it is an effective strategy for when you do see it. So I wouldn't only rely on the crossover strategy as your only system and only take trades based on that, but definitely keep it in mind as a strategy that you can use and definitely profit from on your swing trades, on your intraday trades, or however you feel that you trade best. But I will be making more videos on other strategies that I use to capitalize on upside or downside. So if you guys like this video, leave a thumbs up, subscribe, and if you guys need help with anything at all, don't hesitate to hit me up on Instagram, drop a comment, whatever it is you guys need, I am here to help. My Instagram is Billy Trades Stocks. I'll drop it in the description below. Thanks guys, take care, and have a blessed trading week.